We had another strong jobs report on Friday. It's got Kevin feeling bearish, but Lord knows the Fed isn't going to put out that face. We got Janet Yellen saying, hey, there's no recession here. And we all know that she's always right, so that's a great sign. On today's show, we're going to dive into that. We're going to look at the week ahead in the markets, look at some of the technicals. It's going to be a good show. I'm excited to hear what Kevin has to say. Before we jump into it, hit that like button, subscribe to our channel. Nothing we say is financial advice. We're a couple of guys who just really love following the markets, keeping track of what's going on, trying to make a little bit of money along the way. Kevin, how was your weekend? How you feeling after that jobs report Friday? And, do you echo Janet Yellen's sentiment?
I was glad that it came out on Friday and we didn't have a show that day. It gave me a few days to calm down, blow some steam off. But definitely was not – it's what I expected, considering how bullish everyone was, and then we're seeing all these indicators and, the macro itself. I'm not surprised that it came in that low, but I didn't expect that many jobs to be added. Literally 500,000 jobs in January. I don't know, man. I don't know what's going on in January. That's, people need to work so much or why they're hiring so much. But, I don't see a world where inflation and unemployment go down simultaneously. It doesn't happen. It's just, I don't care what Powell says or what any of these people in power say, because they've lost all credibility. They could have raised 50 basis points, but instead they did 25. And the next day, what happens? Bad earnings from all these companies. And then the day after that, we get 500,000 jobs added in the labor markets in the United States.
Yeah, so, to quickly recap, the previous month's unemployment rate was 3.5%. The expectation coming in was 3.6%. The number, came in under the expectation, and it was at 3.4. So one of the lowest numbers we've seen in, I want to say, decades. And then there was the expectation of 184,000 jobs added in January. The real number was almost triple that. I mean, that is absolutely insane. 517,000 jobs added. Like Kevin said, we're used to these like seasonal jobs, like, people leaving the job market after the holidays for a little bit maybe. But, I'm wondering if this is like people are just finally running out of that stimmy money, which I don't know how they couldn't have been living off of that for this long. Like, I don't know. Like, that doesn't make any sense. I don't know. People just been living off of credit cards for a while, what it was. But we saw that huge number came in, pretty wild to see. The expectation is, I'm keeping track on CME Group and what their expectation. And actually, we've seen since that jobs report came out, last week there was a 97% chance of a 25 basis point hike in March and a 2.6% chance of no hike at all. It's now at 96.7% chance of a 25, 0% chance of no raise, but they've actually started to very slowly increase the chance of a 50 basis point hike. So I think if we get, this week, as we talk about like kind of what we're looking at, we'll get some consumer credit data on Tuesday, which I expect to come in at another huge number. Jerome Powell is speaking at the Economic Club of Washington on Tuesday. We have earnings from Pepsi, Disney, Toyota, a few other big companies. And I think we're going to get a glimpse into consumer spending from that standpoint. Like, Disney's a pretty good indicator of where consumers are putting that, if consumers are actively spending, and the market tends to move when Disney moves, at least like entertainment stocks, stuff like Netflix, things like that. Same with Pepsi, Toyota, like what are car sales like? But I think, next Tuesday, we have the CPI print for January. If that comes in hot, then I think we're going to see a huge shift in the probability of a 50 basis point hike. And this is something that, we talked about last week of, should they just do the 50 now, rip off the Band-Aid instead of like slowly, piddling around with these 25 basis point hikes. And, Powell did say at his presser last Wednesday that he doesn't necessarily need to see the job market tighten in order to feel better about our odds of avoiding a recession. But I mean, that was just such a big number. It's one thing if it would have come in at like 200,000 jobs, like, okay, there's a margin for error there of a little bit, but no, like, that's crazy.
Almost triple. Yeah. I absolutely have no credit. There's no credibility for the Fed, in my opinion now. And I'm just going to say it because I think this is what's going to happen. I think the Fed has lost the battle with inflation. I think they made two critical errors. I think they messed up, doing the 25 basis points and then claiming that we're in this inflationary period right now. I think what we're going to see with some of the CPI data that we get in February or next week for January, I think it might still be coming down, but it's not going to meet expectations. Do you know what I mean? I think it'll come down enough where it's going to be like, okay, look, we're still, inflation's still coming down. And I think maybe in a month or two, we're going to start seeing like we weren't even coming down. We either went sideways or we just saw a massive spike. Again, I'm playing this as long term. I think it's going to be 1 or 2 months before we start to see some of the effects of all these jobs and how much money is currently circulating in the economy right now. But I think they've absolutely lost this. They messed up by not raising rates early enough, and now they're taking their foot off the gas way too early, in my opinion. And just it's too many jobs. I cannot stress how many people are going to lose their jobs in their battle to bring down inflation. Like this thing is a mixture of the 1970s inflation spike that's potentially going to happen, and maybe the Great Recession unemployment that came from 2008 to 2010. Like that's a terrible outlook. Will it happen? There's a good chance it could. I don't think that necessarily the right people are in charge right now or doing the right things in order to, bring this down. Obviously, if we had just raised the rates, it might have been harder in the short term, but we could bounce back from that. You know what I mean? We're not doing that. We're not doing enough at all. And that's not necessarily going to be beneficial to consumers, especially with $930 billion worth of U.S. credit card debt. That's what was it? CNBC came out and said U.S. credit card debt jumps 18.5%. Like, this is insane. Like, this is not an ideal world for consumers, retail, for anyone, especially if they get unemployed because they need to bring rates down. Because they need to bring inflation down and they keep raising rates. Oh my God, bless everyone.
I still don't think enough people realize that every time the Fed raises interest rates, their credit card rate goes up. I don't think that people are wrapping their head around that. Now, I'm not going to say I think they're on the verge of losing it. I 100% agree that they weren't raising fast enough off the bat. And there were, other people much smarter than me, like previous Fed chairs, who were saying that as well. They're saying like, when I think the first rate hike happened March of last year, and it was like 25 points. And former Fed chairs were like, no, this needs to be 75 off the bat. We can't piddle around like this. And I think that we're seeing the effects of that now. Between today, we got like 6 weeks until the next Fed meeting, and there's going to be. We already saw that one jobs report. We got CPI next Tuesday. We'll see another jobs report and another CPI. So we have two of the CPI prints. We'll have PCE as well, which they'll look into. But I think if we come in hot on those reports and the Fed doesn't raise it at least 50, that's when it's over. Right. Yeah. Like, I think they have to act, Jay Powell has said, I'm going to act according to the data. Well, if this data comes in and it's not promising these next few inflation and jobs reports, and they don't do anything about it, that's when we know that, we're losing, like the fight is lost. So I think it's teetering on the edge right now. I don't think it's over. That's just my personal opinion, but they need to send a strong sign if we come in and the next round of reports is bad.
Oh, absolutely. Yeah, I just have zero credibility that they're going to do the right thing at any cost. It's going to be either too little, too late, or they're just not going to raise it fast enough. So when I see, I see this number, this unemployment number, like they have to raise rates. They have to bring down the velocity of the dollar. There's just the purchasing power is going to be going down. There's too much money in circulation. The wages aren't coming down fast enough. So that means that goods are going to continue to rise. Services are going to continue to rise. It's like, who's going to be able to survive off that? It's a terrible setup for a macro situation. And like I said, I don't think the right people are in charge right now that have any idea of how they should have been operating this entire time. And it's just, the worst part is probably just a mixture of this unemployment data and credit card debt that we're going to get. When are we getting the credit card debt? Is that tomorrow or is it next week?
Consumer credit comes out tomorrow.
That's something that we got to keep an eye on. But
tomorrow afternoon, like right before the market closes. I don't know. And historically, I don't know if that number has skewed market activity at all. But something I'll be looking at for sure, just as overall health of the economy is. And this is all to say too that like we haven't fully seen the impact on the housing market yet either. Like that is always something kind of in the background of, you know, rates keep going up. Like the mortgage rate has come down a bit, which is good, but if people are, you know, we can continue to see consumer credit go up, which I can only assume that it will, because that would require, for it to come down would require more people in this country to learn how to handle their finances, which I don't see happening. So it's a little bit scary from that standpoint too. So yeah, I think it's time to like stay the course, batten down the hatches, you know, try to, I'm not going to say you should go totally risk off, because I'm not going to tell anyone what to do with their finances, but I definitely want to be more conservative right now, as the market is overly euphoric. And we'll dive into some of the charts. We'll look at, you know, the DXY, look at the VIX a bit, but you know, we're seeing it today. Like the market's down overall, nothing terrible. And I think that's just kind of the fact that there isn't a whole lot of new information coming out this week. You know, I think it could be kind of like a down, stagnant kind of week until we get the CPI. I think everyone's just waiting for CPI next Tuesday.
Yeah, definitely. I think it's going to take time. It seems like the only thing that the market ever moves on anymore is any data that comes out. I mean, it's kind of disgusting, but that might just be, you know, we're close to the end of a bear market, and people aren't sure whether they want to have their money in or out at the time when the market either pushes up or down. So it's really interesting, but again, I still think that with all the macro concerns that we have, I still think that there's going to be tons of layoffs for, you know, the last ones hired, the first ones that went to work from home. It's going to be easy to get rid of those off the payrolls. There's just going to be a lot more downside than there's going to be upside. Doesn't mean that there's not going to be upside in the short term. It's just things have to play out. We're clearly seeing as data rolls out, it's taking time for the market to move in any direction. So like you said, sideways, stagnant, probably is what's going to happen.
Yeah, I'm expecting a bit of a down week in the market. I think a lot of it's going to be dictated by earnings this week. And I think, you know, that's usually a good sign, but I think it's all bets are off when we get CPI next Tuesday. So everyone's just kind of waiting on that. And yeah, man, I do think that whenever the next big crash is, that will finally be capitulation. I think it's inevitable. I think, you know, the tea leaves are being read. We're seeing it on some of these market cycle charts of like, it seems like everyone is like, okay, we hit the bottom. We've climbed out of it. Things seem to be improving. And next is the big dip. And everyone's like, that's it. I can't do this anymore. I thought the worst was over. Time to get out. And that's when we see the bottom come in.
Absolutely. That's when you eat the fear. Like right now for a lot of bulls and everything like that, obviously they see the unemployment data come in. And I saw tons of people saying that shows that the economy is strong. And they're also looking at the price of everything. The stock market, crypto is shooting up over the past month. Again, it's just a reminder that the market is not the economy. You know, not tons of people don't have exposure in the market, but the economy is inclusive of all things that are going on in the world, in the United States, between consumers, retail, everything, businesses. So it's a lot broader, the economy. When you think of the market just going up, that doesn't necessarily show that there's strength or health within the economy.
Yeah, just because we care about the markets doesn't mean that the majority of people do, because most of them just do not at all.
Right.
So let's move into. Did you have anything else you want to talk about on the macro front, or are you ready to move into some of the charts?
Let's do the charts.
Okay.
All right, let's pull up DXY because that is our favorite. And oddly enough, today we saw the DXY doing pretty damn well. Very proud of this little US dollar over here. So just pull this up. All right. You see it on your end?
Let me add it. There we go.
All right, sweet. So yeah, we see the DXY. It shot up a good amount. Let me go to the daily. And you can see that we closed here on Friday evening. It was about, 102.992, so almost 103. Clearly today or last night when the markets opened overseas, we shot all the way up. We hit this level. This was a level that I was targeting, getting close to that overbought. Doesn't mean that can't just keep staying overbought. Obviously, we're oversold for a period of time, and the price was just going up down, 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 down there. So we got to this point where we just broke out of this and shot up. So when I look at this and I see the 50 right here in the 200 EMA, this is necessarily bullish if we can get this 50 EMA above the 200 in the daily. Is it necessarily super bullish long term? Not necessarily for the daily, but it definitely shows that we do have some price momentum to the upside, and we're starting to push this this moving average above the 200 moving average, which is a little bit lagging. But I think that we're going to see that because when I look at the weekly, we are still extremely oversold. So we have plenty of room to the upside. The momentum's there for the DXY. The one thing that a lot of people were making a mistake, in my opinion, was they thought that because the DXY was coming down, that it's necessarily bearish, and risk assets are going to be the reason you're going to want to put your risk assets are going to be where you want to put your money in. However, for me, I never lost faith in the dollar, mainly because we stayed above the 200 EMA. 200 EMA is down here. We didn't even come close to it, to the point where I would have thought, okay, that's it for the dollar. Risk assets are definitely going to take off. We stayed above it the entire time. We just came below the 50 for a little bit. We're under the 50. I think that once the stochastic RSI gets up pretty high, we'll be above the 50, and then it'll start to recorrect to the point where we're trading somewhere up in this level. To be determined once we get a little bit more data coming through. But when I look at the daily, I think that we are going to see a bit of a retracement at some point, mainly because we are pretty overbought, whether that's here at 104.661, and then we just kind of just sideways trade in this range between 103 and 104, or if we come back down here and then we find support at maybe like 102.87. But I do think that the momentum for the dollar is to the upside. And again, this coincides with everything we've been talking about from the macro unemployment. We saw the price shoot up because of the unemployment data that came out. Like people just said that risk assets are probably going to take a hit because there's too much money in the economy. They went risk off, dollar shoots up. That's the way it is. And once we saw this pump, we saw a little bit of a dump over the weekend for some of the risk assets. We saw Bitcoin take a pretty good hit last night into the close. I think right after the close, it was 22,687 or something like that. So it came down a pretty good amount. It's obviously bounced back, and we can see that the dollar came down a little bit. But this thing looks strong as could be to me. I'm really excited for the dollar to finally be breaking out of this channel. We've been waiting for it for the longest, but let's not get ahead of ourselves. Let's just watch to see how this plays out over the next week or so, and then hopefully we could get a better read on what risk assets are going to do as the dollar rises.
So we had a question from Ace right here, and I'm going to pull up the chart he's referencing real quick. So let me go ahead and share that, because I actually think we're not quite even to that point yet. So if we look, this has been the psychology of a market cycle. I personally think that we haven't hit capitulation. I think we're still, maybe we're at like denial. Maybe we're like near this peak of denial, and we're getting ready to, to take that leg down. So I don't think we've even gotten to this like anger portion of it yet. Just personally, I think that there's still too many people who are overly bullish, who think that the worst is over, and this sentiment here of I'm getting out, I can't afford to lose more. I think that that's what we're going to see happen in the coming months. I don't know exactly when, obviously, but that's where I think we're at for that chart. Is we're still not even at capitulation.
Yeah, I'm not actually sure. I think that we did see some capitulation with FTX, but I don't think that if we're talking capitulation being to a point where, we're going down like 50% or something like that, we haven't seen that yet. That's what I'm still waiting. So maybe I'm with you there with the capitulation. I think that chart where the anger rise, the pump from the anger section, looks similar to what we saw because it was just so parabolic and straight up. But I definitely think that a lot of people are just in denial. So I think I'm right there with you on that, JWeb. But yeah, I think that we still are waiting on a 50-something% drop for Bitcoin, way more for alts, and then probably like 20% for the stock market, NASDAQ, all those.
Yeah, I mean, I've definitely seen some people who have been around crypto for a long time, whose opinions I respect, just kind of like, that we're at the bottom when people are buying Bitcoin for, less than 10K, and the people who didn't really have it in them for the long haul have exited. So, I mean, that's scary to think about, that we could go down to, under 10K, but it's definitely possible.
I'll take it. Let's give it all to me, JWeb.
Sell Kevin all the Bitcoin he can handle under 10K.
Yes, all that I can carry. All right, let's move to Bitcoin. I almost called it the BTC. I don't know why. But yeah, let's look at Bitcoin. On the daily, we could see that we're pretty oversold right now. Like I said, the price came down over the weekend. We broke out of this channel that I was watching right here. However, I do think that there is momentum to the upside. As we can see right here, we're oversold. I think that we could push potentially to this 25K. Reasoning for that, mainly liquidation. I think that a lot of people that are seeing the price come down, unemployment data, the dollar's growing stronger, they might start moving into heavy short positions. And that might just be market makers licking their chops. Just, all right, let's screw everyone down here real quick, go up there. Everyone goes long because, oh, look, we're at 25K now. It's going to keep going. And then they just liquidate everyone on the way down. So this is what I mean by liquidation season and how I choose to be risk off because I know that the price could go in either direction here, despite what the technicals are saying. Like on the daily, yeah, there's plenty of room to the upside, but on the weekly, you're coming down. Like I look at this, volumes are coming down, prices coming down. You're below the 200 EMA again on the weekly. So this to me seems like rejection, fake out, came above it, got rejected. Now we're closing below it, but not to say we can't come up here. I still say that if the price continues to come down, though, this 50 EMA on the weekly is just going to follow it. And then this 200 EMA is lagging. So it's going to probably curve up a little bit. And then that's where we find that death cross. And that could be the capitulation that we're talking about. We're going to see this thing. Like, there's no way that we're not going to see this. We have price action, 200 and the 50 all meeting at one spot. And it's just, I don't know. If you don't see all three of those touch at one point, then we don't deserve to buy Bitcoin ever at 10K. But definitely something that I'm excited to see because I know that it's going to freak out a ton of people in the market. But we've been anticipating it. We know how to prepare for it. But yeah, so that's what I'm seeing with Bitcoin. Again, do I think that it's going to come down a good amount? Absolutely. Like if I'm looking at the weekly, if we do find this to come down, depends on how strong this move is. I would say, let's say a 50% retracement from where we went all the way to the top. That would be, that's further down. This move, let's try this. From here to here, that's 45%. So let's say probably around like, oddly enough, that might be just right here at 1966, which was, if you remember, monthly support for the longest amount of time. That was like, if we're below that, we're going to go test 14K. So that'd be hilarious if we ended up on, say, the weekly, once it gets to oversold, we end up somewhere around there, and then the monthly closes below that, maybe February or March, and then we're just right back to the, okay, 14K looks like that's the next target. We got rejected off the 200 EMA once again. We're going to put in a new low at some point, and that would just pair up really nicely compared to looking at what these charts are saying. So, yep. That's all I got to say, I think, for Bitcoin. It's not too much, not too crazy. Obviously, we're going to need some time to watch everything play out. But the DXY continues to pump. This thing's going to come down. And then if people start freaking out because the price is coming down too fast, and it's all retail that's holding Bitcoin right now. They're just going to sell it into the hands of people who are waiting to buy it much lower.
Okay. Let's get into ETH then so we can wrap it up.
Absolutely. Yeah, so ETH is very interesting too because a lot of people are getting bullish on ETH. Again, we're above the 200 EMA. We're coming up, going in this parallel channel, but we didn't break out of it yet on the weekly. So that tells me that with the stochastic RSI being so overbought and the volumes coming down over here, it's not a lot of volume. It's not something that would be sustainable in my opinion. I wouldn't be surprised if you see some red massive candle just like take us all the way down. And what could that possibly be? That obviously could be just Bitcoin dropping. If Bitcoin dominance continues to rise, let's say we get to 45%, 46% or something like that, and tons of people were opening up longs once we got above this 200 EMA, I wouldn't be surprised, I know I said this last week, if we see mass liquidations for ETH to the point where they outpace Bitcoin's liquidations. Like most of the money is just being driven from ETH liquidations. I don't see a lot of strength with ETH. Let's go to the daily. Like obviously we're just trading in this channel currently. I mean, the 200 EMA is right here at 1527. And if I look at support, that's literally where we probably would go to. Necessarily, I think that the major move, if we do see a bit of a push to the downside, would be somewhere around like 1450, 1460. If that failed to hold, we're obviously going down to this key level support that we had for the longest, which would have been 1338. Again, we're looking at over here. This was a massive shoot down. That was what, FTX? Yeah, FTX. And we grinded up, and it's pretty parabolic that we just went straight up. There's not a ton of, sideways consolidating trading. So that tells me that we're probably going to come down same way we came up, pretty fast. But again, this could take time. This could be a slow bleed to that point where, people are just losing interest into it. The dollar continues to rise, so the price naturally goes down. But when I look at ETH, I think that this thing is set up for tons and tons of liquidations. Obviously, this 50 is going to probably come up if the price continues to go up, maybe test this upper channel of this parallel channel. Upper line of this parallel channel. But I think that we are going to see a good fake out. And then once the price begins to move down, we're going to get below this 200 EMA. We're going to get below the 50. 50 is going to follow with it. And then on the weekly, we're going to be well under the 200 EMA again. And like I said, not tons of support, maybe right around here. And then right here at 1338 is probably the key level of support. You can't just go up. Like we went straight up here and we came straight all the way down here. So you need to build support. You need to do it naturally if you want to have sustainability of the price. I don't see that with ETH. Again, I think this is a house of cards. But if Bitcoin dominance just like completely takes off or continues to stay strong, a lot of altcoins are going to take a bigger hit than I think Bitcoin would. Probably like above 50% in the long-term macro view.
Okay. Yeah, I don't think we have much else to discuss as far as any of the other altcoins go. So that is where we are going to wrap it for today. I think a lot of focus right now on the macro, on what is going on with corporate earnings this week, with the health of the consumer, and then next week we get new inflation. So it's never a dull day, that is for sure. It's definitely keeping things interesting, keeping your head above water, learning, trying to just, like we've said over and over again, like if you can be one of those people who isn't carrying around a ton of debt, who is living below their means, you're going to set yourself up for great success in the future. Because right now it is all about, being patient, waiting to accumulate high quality assets at lower prices than others. And you have to be liquid to do that. So that's the name of the game at this point, is just be more patient than the other people in the market, because the big money is being very patient right now. They're waiting, they're chomping at the bit to buy your coins for less than what you paid for them. So be smart, be vigilant, and stay on top of it.
Yeah, and then last thing to add, remember when stock market dropped 54%? We talked about last week. Well, it rallied for 10 years after that. So you're going to see some short-term pain, but it always comes back. But you just have to be patient. You have to know when to take the right risk for the maximum opportunity. And I think that's what a lot of big money is currently doing. That's why they're risk off. They just got cash waiting on the sides. That's why we're not seeing, Bitcoin go to the moon right now. I think everyone sees the macro and they understand that this is a long-term play for, obviously an insane amount of opportunity. Like this will definitely hurt a lot of people, but there will be a lot of people who succeed from the ashes of this entire debacle of inflation.
For sure. The best gains I've ever made in the market are from waiting it out and being patient and not panicking. And that's what you got to do right now. So I'm not telling you to buy right now. I'm not telling you to sell, but I'm just telling you to be patient and accumulate when you can. Okay. That's the name of the game.
Yeah, I agree.
All right, that's going to do it for today. Kevin and I will be back on Thursday afternoon, taking a look at some of the news of the week with these earnings reports, some of the data that comes out, and getting prepped for the following week. So looking forward to that. As always, thank you everybody for watching. Once again, hit that like button, subscribe to our channel if you haven't yet. Please share this out with anyone who's interested in the markets or wants to learn. We want to try to provide as much level-headed, non-overly emotional data as possible here. So, we're doing the best we can. We're trying to get better every day. So we appreciate the support. So for Kevin, for the team at FLOLiO, I'm Jeremy. Have an awesome day, everybody. We will see you on Thursday.
Take care, everyone.